Good evening, all. Ira Epstein, and here we are with your financial market wrap-up. And this wrap-up is for Monday, the 30th of October, 2023, about 5 p.m. Central Time. Happy Halloween to all. That's pretty interesting. And what's scary is the amount of money, the successful amount, I guess, that the UAW got from the big three auto. Mr. Fain goes down as one of the best negotiators around at this point. Give him credit where credit's due. The average car cost, I was watching CNBC, they're calculating it, and the numbers aren't set, but they're close, they think. $3,500 a car more. So where's that going to come from? You? Me? I don't know. You know, if you're buying a $30,000 car, which there aren't a lot of, but a $30,000 car, it's 10% more. That's an awful lot, don't you think? So I'm curious what the Fed thinks. We have seen now UPS, we have seen FedEx, we have seen airplane pilots, and now the auto workers, all these numbers soaring as to what they're getting in new labor. Where's it coming from if it's not an inflationary economy? And if it is, why is the Fed getting off the horse right now? Which is what they're probably going to do this Wednesday. We have 3 central bank meetings this week. We have in the morning, the Bank of Japan. Then Wednesday, our bank, Federal Reserve. Thursday, we get the Bank of England. Go back to Wednesday. Early in the morning, well before the Fed, we're going to hear the U.S. Treasury quarterly refunding. They're talking a bigger number than we just did, over $114 billion. Whoa. We saw interest rates go up over 5% on this number. Are we going up another 0.5% or more because of that? It easily could be. Who's going to have the guts to ask the Fed chair if all these wage increases are inflationary, and what's the impact going to be on the economy, and how does he contain inflation when every time you turn around, you're getting these big deals going on that is one thing, driving prices up. No way around it that I can see. So I'm praying somebody will have the guts to say that and question them as to where they're at. We get the jobs report on Friday, the JOLTS report this week. I think we get ADP also. You got an awful lot coming at you. It's probably a good time to play it very low key in bonds and notes. The stock market had a hellacious rally today. There's nothing else you can say. I don't think most people expected it, that you come in, you've got the war in Israel, you could be still dragged in, everybody over the weekend scared, and you rally 500 points today in the Dow Jones, you put on 50 points in the S&P. These are big rallies. The market that is the weak sister continues to be the Russell. Now, at some point, the Russell will flip on you and get a big short covering rally as the other markets don't get it. I don't know when that'll be or not be. In the metal markets, no, you're not running to the moon because of the Israeli war. As long as it stays contained, and that is the big if, as long as it stays contained right there and we don't get the other players involved, that's good. We've now got our other carrier group. The Eisenhower has joined up with the Gerald Ford. They're in the region now, so that is good news. Iran, take notice of what that is. I'm hearing that Russia has been producing more oil now that their maintenance period is over, and we see this because you're down in Brent to $86, back to $82 in the WTI oil. So as we come to the chart action, we're getting a bounce. Okay, on a weekly chart, I can live with that. But on the dailies, that's not so impressive. I mean, I know you're going to tell me, oh, Ira, you don't know. I think I know. This is a market that fell apart, came all the way down, and we had a nice rally today after a monster break. Now, I'll pick up the charts and bring them back in line. Lower highs, lower lows, that's still bearish. The market has had a bearish crossover. The 18-day average got underneath the 200, and with that, the market went down, made the lower lows right when that happened. So you're getting a bounce from there, but this is a big resistance area. I don't see anything on the horizon that tells me I'm just going to get up and run through that. When we look at the Bollinger Band, I understand the bounce, but all you did is move back to the right-hand side. And are you going to have an embedded reading? An embedded reading occurs when the two numbers that make up the slow stochastic are going sideways underneath 20. Day one of embedding, I'm just counting backwards, by the way. Both numbers under 20 today, Monday. Both numbers under 20 on Friday. They were not that way on Thursday. Tomorrow's the key day. If they embed, it tells me just going into the FOMC meeting how much more bearish I am. But there's a positive. If you get an embedded reading and you lose it, it's like a catalyst, the market's going to go the other way. So if it develops the bearish reading and it loses it, it really puts into play getting back to the 18-day average in time. Would I want my traders to go through the quarterly refunding announcement in the morning with currency position in the dollar or the euro? No. Other currencies that have nothing to do with that, maybe, but not that one. When I come to the NASDAQ, oversold, not yet in that embedded area. You can't count tonight, as you know, but we can count yesterday, which is Monday. Monday, both numbers under 20, both under 20. Tomorrow could be the key day. So again, that. In the Dow, not the case, all right? So this market paid attention to the lower band. We're getting a bounce. You could even get over these last rally highs and negate it, but getting up and running, get serious. Why would it happen? It could, but I don't see what's on the horizon to make it happen. And I'm just super bearish on this market. Lift it up, and I think the pros all want to sell it. They think they've missed the boat. The pros that I know, and they seem to want to come down. And I know the guys that are saying, this is all you hear, you are so wrong, Ira. Interest rates are at their peak or about to peak, and this is what you want to own because it's another way to play it. I get it. And I'm not saying you're wrong. I'm saying when it happens, I'll be a day, a week off. What's the difference? Meanwhile, I'm not getting run over on that, and you guys are. In the 10-year notes, you've got a market that's oversold, a bear market rally. That's what this is. Why? When you're under the 18-week average, your bias is down. When you're over it, the bias is up if you close over it. Bias is a filter on other chart studies. As long as you're under that, I'm still very much in the bear camp. In the 5-year notes, another bear market rally, right up and stop there. I'm not looking for anything big until we get through Wednesday. Then I'm going to have a whole different attitude on the market, possibly. We'll see where that's going to carry. I'm seeing sideways action on the dollar index here, and that makes so much sense going into all this data this week. And the euro's doing the same thing. No trends. Sideways action, flip-flopping back and forth. I don't see anything. And another bear market rally. If you look in the pound, you're under the 18-day average, and you're just coming up towards it. Makes sense. We're going to see what the Bank of England has to say come Thursday morning. Then we get to MBTX, all right? So here's your November Bitcoin. And as I said back here, I think the pros took some money off the table. Be a bit careful here. If you start dropping down with that red line underneath 79, probably going to get more of a correction than you would think. Brent, this is the January Brent versus WTI oil. I mentioned last week it's been on a tear against our oil, and it is. It's a new high on the move, 467. When you look at the Brent, you've come down. The difference is one thing, but look at how the market's come into a downtrend. You heard me, a downtrend. Why? A lot of this was built, when Israel invades, that the oil's going to be in jeopardy, blah, blah, blah. It hasn't been. The Saudis want to produce. The other producers want to produce. They want to get their money. The resistance is 87.66. You're nowhere near an uptrend. If anything, the pros might be selling. I don't like the dollar risk because you'd have to risk back over the 90-40 area, but that's what I'm seeing. In WTI, trend is still down here. I see the resistance at 84.61. You'd have to get over 85.90 to negate the downtrend. Both of these can't turn bullish. They can negate downtrends on big rallies, but I think the pros are going to sell into it in the near term. In the heating oil, I've joined the bear camp. but not when you're this oversold. I'll let somebody else want to carry the day. But I think the 298 level is a big resistance level now in this market. And in the nat gas, it was nice to have that one rally, but you don't seem to be going anywhere just yet. Now, this morning, I was so busy putting out trade recommendations, I truly didn't know if I was coming or going. It began to a degree in the futures, but when we got to the Spider ETF update, they were just everywhere. Probably eight or nine of them, I think, that we had today. Some got filled, so that's good news. I cover all this every morning. Let me tell you what I do. My charts are going to look like this. They're jet black with more studies than you're seeing here. That's the very first thing. The next thing, Monday through Friday morning, I typically put out and record my futures video. I begin recording at 5 to 5:10 in the morning. I'm going to cover in it longer term trades off weekly charts from time to time. On the weekend, they're all longer term. The daily ones, sometimes I'll go to the weekly charts, sometimes I won't. I cover the whole spectrum. It could be the stock indices, the currency markets, the metal markets. It's going to be the meat markets, the grain markets, the softs, the energy markets. They're all going to be covered there in detail. I also write a report, my full research, and I really hone in on things. Sometimes it's longer, sometimes it's shorter, but I always make it where you can read it in no more than a couple of minutes. And I'm talking a couple of minutes. I learned a long time ago, I don't want to read reports every single day, 2 of them from a writer. If I'm going to read 2, they've got to be readable in a minute or 2. Hit the highlights for me. Where are you leading me? Give me the message. Let me move on and show me the charts in the morning so I can see what you're leading up to. Bingo. That is the name of the game as to what I do. So, like to see this? It's pretty simple. Go to our website, iraepstein.com. You can move your cursor right here. It'll take you. Go under the word research. Again, you can do that way, or the cursor up there, just give it a click, it'll take you there. Read about it, join me. Could it be easier? I'm Ira Epstein. You have yourself a good evening. I'll catch you all in the morning. Remember, Bank of Japan first thing. Let's see what they do. You have a good day.